In the world of global finance, a new alliance is quietly but steadily shifting the balance of power: BRICS. While headlines often focus on Western economies, a different story is unfolding behind the scenes, one that could redefine the future of international economics. BRICS originally stood for Brazil, Russia, India, China, and South Africa. But now, with the recent inclusion of Saudi Arabia, the UAE, Iran, and Ethiopia, the group's influence is expanding rapidly, both geographically and economically. Together, these nations represent not only a massive share of the world's population, but also a significant portion of global economic output, trade, and resources. Their combined markets and labor forces are reshaping the world's economic landscape. Despite their cultural, political, and historical differences, these countries share a common goal: to gain more influence over the global economy and to challenge the dominance of traditional Western powers. For centuries, gold has symbolized wealth, power, and stability, its value enduring and independent of any single government or currency. It's a universal standard that transcends borders. Central banks around the world hold gold as a safeguard, especially during times of economic uncertainty or geopolitical tension. It acts as a financial anchor when other assets become volatile. When national currencies falter or global crises erupt, gold often rises in value, providing a safe haven for investors and governments alike. For BRICS nations, gold is more than just a safe haven. It's a strategic tool for asserting independence and building economic resilience. By boosting their gold reserves, these countries are sending a clear signal. They want to reduce their dependence on the US dollar and reshape the rules of global finance in their favor. This movement isn't just about economics. It's about shifting global power, challenging old hierarchies, and creating new opportunities for influence. As BRICS accumulates gold, they're laying the groundwork for a new financial order, one that could change how the world trades, saves, and invests. In this video, we'll explore why BRICS is buying gold, how they plan to use it, and what this means for the future of the US dollar and the global economy as a whole. The story of BRICS and gold is a story of changing global tides, one that's only just beginning, and whose impact may be felt for generations to come. Central banks worldwide are buying gold at a pace not seen in decades. This surge in demand is making headlines and raising questions about what's driving this global trend. In recent years, annual purchases have topped 1,000 tons, led by emerging economies, especially BRICS. These countries are not just buying for tradition, they're making a strategic shift in their reserves. Why? The world is more uncertain. Geopolitical conflicts, trade wars, and economic volatility are the new normal. Central banks are responding to a landscape where risks are multiplying and the future feels less predictable. Gold is the ultimate insurance policy. Unlike currencies, it carries no political risk. It's a tangible asset, trusted for centuries, that holds value even when paper money falters. BRICS central banks are converting dollar reserves into gold, diversifying to protect against shocks. This move helps them reduce reliance on a single currency and strengthens their financial independence. The US dollar's dominance means Washington's policies ripple worldwide, and access can be restricted for political reasons. For many, this creates a vulnerability that's hard to ignore. The freezing of Russia's reserves in 2022 was a wake-up call. Assets held abroad can vanish overnight. It showed how quickly financial power can be used as a weapon. Gold, stored at home, can't be frozen or seized by foreign powers. It offers a level of control and security that digital or foreign-held assets simply can't match. For BRICS, gold is a shield, ensuring sovereignty and economic security. It's a way to safeguard national wealth from external threats and unpredictable global events. It's a logical move. Protect wealth, reduce exposure to US policy, and build a more resilient future. By holding more gold, these nations are preparing for whatever comes next. This gold rush isn't random. It's a coordinated response to a changing world. Central banks are acting with purpose, learning from recent shocks and planning ahead. The message is clear. BRICS wants a financial system less vulnerable to outside control. They're building a buffer against sanctions and political pressure. Gold is their chosen foundation, a timeless asset that underpins their quest for stability and independence in a turbulent world. Within BRICS, China and Russia are leading the gold charge. China's central bank has been a relentless buyer, with official holdings near 2,300 tons, though many believe the real figure is higher. Russia, too, has amassed over 2,300 tons, a move that proved vital when Western sanctions froze its foreign reserves. Gold became Russia's financial lifeline, offsetting the impact of sanctions. India is also steadily increasing its gold reserves, recently surpassing $100 billion in value. For India, gold is both a cultural touchstone and a strategic asset. The motivations are clear: diversify away from the dollar, guard against sanctions, and boost economic independence. Gold is universally valued and free from any single nation's control. This isn't just about individual countries. It's a coordinated effort to build a neutral foundation for a new system of trade and settlement. BRICS is quietly constructing an alternative to the Western financial order. At the heart of the BRICS gold strategy lies a powerful goal: de-dollarization, reducing the world's dependence on the US dollar for international trade and reserves. For decades, the dollar has dominated as the world's reserve currency, giving the United States immense influence over global finance, trade, and even politics. But recent events have made BRICS nations see this dominance as a vulnerability, especially after the US used its financial power to freeze Russia's assets through sanctions. The lesson is clear: assets held in dollars can be weaponized at any moment, turning economic tools into instruments of pressure. In response, BRICS is now pushing to conduct more trade in their own local currencies, like using yuan for oil deals between China and Saudi Arabia, bypassing the dollar entirely and forging new financial pathways. This approach not only reduces transaction costs, but also shields their economies and trade from the reach of US sanctions, making their financial systems more resilient. Gold is the anchor of this new system, a neutral, stable asset that backs up these efforts and inspires confidence among participants. Of course, trading in local currencies brings its own challenges, such as volatility and the need for trust between nations. But gold provides a reassuring foundation, helping to smooth out these risks. By amassing gold reserves, BRICS nations are building trust and credibility for their de-dollarization project, signaling to the world that they are serious about creating a stable alternative. The goal isn't to destroy the dollar, but to create a parallel global system, one where the dollar is just one option among many, and countries have real choices in how they trade and store value. In this transition, gold acts as the security blanket, making this bold shift away from dollar dominance not only possible, but credible and sustainable for the future. To truly move beyond the dollar, BRICS needs new financial infrastructure. The global payment system is dominated by SWIFT, but BRICS is building alternatives. China's CIPS allows international trade in yuan, bypassing US-controlled systems. Project M-Bridge uses digital currencies for instant cross-border payments, with Saudi Arabia now on board. At the 2024 BRICS Summit, leaders discussed BRICS Clear, a new settlement system to keep trade flowing even if cut off from Western networks. These platforms are growing, connecting BRICS economies directly and reducing dollar dependence. The strategy? Expand existing alternatives while building a robust, independent financial architecture. The plumbing for a new financial world is under construction. BRICS isn't creating a gold-backed currency for daily use. Instead, gold acts as collateral, a stabilizer for trade imbalances. If, say, Brazil runs a trade surplus with India, gold can settle the difference, even without moving physical bars. This system builds trust. Countries can accept each other's currencies, knowing gold backs up the deal. A dedicated BRICS precious metals exchange could further separate their system from Western markets. Gold becomes the ultimate guarantor, giving confidence to trade in local currencies. It's not about returning to the gold standard, but about using gold as the bedrock of a new, multipolar trading system. In this framework, gold is the silent enforcer of trust. It's the glue holding the new system together. The BRICS vision faces real obstacles. Their diversity is both strength and weakness. Political tensions, like those between India and China, slow progress. Membership is fluid. Some countries, like Argentina, have hesitated or declined to join. Even new members like Saudi Arabia hedge their bets, engaging with BRICS but staying close to the US. Fear of Western sanctions still looms. Banks worry about losing access to the dollar market. Economic differences, like China's strict currency controls versus India's caution, make integration tough. Trade imbalances are hard to manage, and in a crisis, the dollar's deep markets remain the ultimate safe haven. Building a seamless alternative system is a long, complex process. The road to de-dollarization is anything but smooth. Despite BRICS' efforts, the US dollar's dominance isn't fading overnight. Nearly 89% of global currency trades involve the dollar, with daily turnover near $10 trillion. The dollar's liquidity and the trust in US financial markets make it the world's anchor currency. In crises, investors still flock to the dollar, a reflex that reinforces its central role. BRICS currencies, even China's yuan, have a small global footprint by comparison. The shift away from the dollar will be slow and incremental, not a dramatic collapse. Expect a gradual fragmentation, the dollar, euro, yuan, and perhaps gold-backed blocks coexisting. The dollar's reign is being challenged, but it's not ending soon. The future is multipolar, not dollar-free. The future of global finance will be shaped by gradual change, not sudden upheaval. BRICS gold strategy and new payment systems are long-term projects, signaling discomfort with dollar dominance. Gold's role in global reserves is rising, but the de-dollarization journey will be slow and uneven. More trade will be settled in local currencies, and alternative platforms will expand. But the dollar's deep markets will keep it at the center. BRICS nations must balance building alternatives with the realities of the current system. A sudden break from the dollar would be too disruptive, even for BRICS. The real story is about building resilience and options, not toppling the dollar overnight. Gold is the foundation for a new parallel financial world, one that's taking shape, step by step.